Hi everyone. Today we're going to talk about dividends. First off, what are dividends? By definition, a dividend is a distribution of profit by a corporation to its shareholders. To put that in simpler terms, it's basically a payment you get for simply owning a company's stock. For example, let's say you own one share of Coca-Cola stock, which you can get for $50 right now. Every year you hold the stock, Coca-Cola will automatically pay you $1.64. Now that might sound like nothing, but early investors in Coca-Cola like Warren Buffett, who own millions of shares, make $1.5 million every day on Coca-Cola dividends alone. Now, in order to be eligible for these dividends, there are some rules or dates you need to be aware of. The declaration date, ex-dividend date, record date, and payable date. So what are all these dates? The declaration date is when the company announces they are paying a dividend on a certain date. So let's say Coca-Cola announces on March 1st that they're going to pay a dividend on March 30th. That would be March 1st would be the declaration date. The ex-dividend date is the date you must own the stock in order to be eligible to receive the dividend. So the ex-dividend date for Coca-Cola might be March 15th. So you have to own the stock on or before March 15th in order to be eligible for the dividend. The record date is the date the company records every shareholder eligible for a dividend. So the record date always comes one business day after the ex-dividend date, and that's when the company records down which shareholders are eligible. And finally, the payable date. This is the date where shareholders receive their dividend in either cash or stock. So as stated before, the declaration date was March 1st, when Coca-Cola announces that they're going to be paying a dividend on March 30th. So March 30th would be the payable date. These rules might seem really annoying and complicated, but in reality, all you have to do is hold a stock past all of these dates, and you will automatically receive the payment without doing anything. Finally, some of the best dividend stocks on the market right now are commonly known as the dividend aristocrats. They're known as dividend aristocrats because of how consistent they are at paying shareholders. Keep in mind that not all companies pay dividends. Many growth stocks like Tesla do not pay their shareholders. Some of the best-known dividend aristocrats include AT&T, AbbVie, McDonald's, Lowe's, Coca-Cola, Target, and Walmart. All these companies have been paying consistent dividends for at least 25 years, with Coca-Cola being the longest, and it's been paying for 56 years consistently. Beside each company, I included the dividend yield for each stock. It shows which company has the highest dividends. But stocks with high dividends tend to have less growth than a low dividend stock. For example, AT&T, the highest dividend paying stock on the market, with a guaranteed yield of 6.8% every single year, has stayed around $28 per share since the March 2020 crash. While Walmart, which pays a small dividend of 1.71%, is up 20% in the same time period. To sum it up, high-paying dividend stocks are safe and reliable, but they have less potential in growth in terms of stock price than a low dividend paying stock if the market does well that year. So that's it for this presentation, and I hope you learned something today.